The Fed's rate hikes continue to ripple through the housing market, even if bulled-up investors in stocks don't care to pay attention. We just saw lackluster housing starts figures for June. The question now is what's next in housing? National Association of Homebuilders CEO Jim Tobin perhaps has that answer for us. Jim, good to see you here. Let me frame it to you this way. You have RH, Home Furnishings Company, that CEO, Gary Friedman's painting the housing market as completely falling apart. But if you look at the permits component of the housing start today, signs of life. Where should, or should I say, who should investors believe?
Well, I think what we look at the way housing starts came out today, if we take out the May numbers, which we believe seem to be abnormally high, and maybe that's a little bit more of an aberration now, what the June numbers show us is that we're actually back on trend. In fact, even with this dip, we're still looking at the largest number of housing starts since June of last year. So the demand continues to be out there. But when we look a little bit forward ourselves, we are seeing interest rates are starting to wear on home buyers out there. Permits give us a little bit of a breathing room in the future. But right now, it seems that while demand is there, very few people are able to meet those or match those 7% interest rates.
Jim, should potential home buyers, or even those that are selling, should they almost be thinking as 7% or that 7% level as the new normal? Or do you think we will see maybe some downward movement here in rates between now and year end?
Yeah, we think that interest rates are going to settle downward over the next 6 months, without a doubt. We're clearly at the end, or about to be at the end, of the Fed's tightening phase. That said, I don't see the Fed easing anytime soon. In fact, we predict that the Fed's going to hold steady for probably another year or so. So I think while interest rates should come down, or at least mortgage rates should come down over the course of the next 6 months, I still think that home buyers need to get used to 6% or even 5.5%. But gone are the days of our 3 or 4% mortgages.
Jim, what should millennials living with their parents right now be doing? You have some money saved, maybe $150,000, $200,000. Do you just bite the bullet, take out a mortgage at these rates, and finally get into a home and get out of your parents' basement?
Yeah, I'm pro home ownership, plain and simple. So for me, if you've got money saved out, you've got money for a down payment, go ahead and dip your toes in. You're going to find more new homes, brand new homes, are for sale than existing homes. We are running into this phenomenon where a lot of the existing homeowners are in those 3 or 4% mortgage rates that I talked about, and they're reluctant to move out into those higher rates. But there are some new products out there, and I would encourage anybody who wants to dip their toe into home ownership and to get in now. If you can find a home that meets your need and you can qualify for it. But it's always a great time to buy, especially with the market where it is. I'm encouraged that it's time to buy.
Jim, when it comes to lot availability for these home builders who are looking to build homes, is that an issue yet? And I guess if it's not yet, is that something that could potentially be a massive challenge here?
Yeah, I think the challenge facing our builders now is finding land to develop. That's a big issue, which means local governments need to help if we're going to solve the housing affordability crisis in this country. And the only way to truly do that is to build more housing. Then we're looking for local governments to embrace the need for home ownership and to encourage home ownership and rental. By making sure that they're putting the policies in place to find more land, and then lending will begin to ease over the course of the next 6 months or so. So there's opportunities out there, but it's going to take everybody pulling on the home ownership wagon to move forward.
Jim, all I think investors have heard from home builders, among other things, the past 2 years, and that has continued into the first half of this year, is inflation in materials prices, lumber, metal, labor, you name it. Has inflation started to turn in the components that go into building a home?
It has definitely. Lumber reached its peak about 2 years ago. That's now consistently down, which is great to see. In a lot of ways, the building material supply pipeline is whack-a-mole. Some components are up higher than others, while others are down, and then they seem to reverse over the next several months. Give you an example. Right now, electrical transformers and electrical components that power a home are the real drag on home construction and apartment construction right now. But I do think inflation is easing in the component space and will continue to do so. We know how much the Fed is watching all of that and all those inflationary numbers. But from a homeownership perspective, we're encouraged that things are trending in the right way.
Jim Tobin, always great to hear from you, CEO of the National Association of Home Builders. Thanks.
Thank you.